Hello, this is the Insurance Perspectives podcast presented by HawkSoft. And on today's show, we have Kelly Endicott from K&M Insurance Agency in Columbus, Ohio, and Dan Karr from ValChoice. The goal of the conversations we have is to help you, the independent agent, learn more about technology partners in the space. We understand that there are many options in the industry, and we want to offer insightful interviews with the companies and mutual customer to help you make your decision. Dan and Kelly are here to discuss how ValChoice brings value to K&M Insurance Agency. We hope you enjoy the discussion and be sure to follow the podcast on Apple, Spotify, or wherever you listen to podcasts. Thank you. For the discussion this week and next, we have Dan Karr of ValChoice and Kelly Endicott of K&M Insurance Agency. As this is part one of our series on ValChoice, we're going to start with a focus on Dan. Kelly is here with us as well, and we'll save her full introduction for next week. We like to keep my talking to a minimum on the Insurance Perspective podcast, so here's my quick introduction of our API partner guest. Dan Karr is the CEO and founder of ValChoice. When you encounter him at an event or out in the wilds of New Hampshire, where he calls home, please ask him about sailing between the West Coast and Hawaii in his youth. Dan is also lucky that I am willing to speak with him, an alum of Linfield University and a Wildcat, as I am a proud graduate of rival Willamette University. Dan does often refer to me as his favorite Bearcat, so that scores him some points. These are allusions that will matter to a slim portion of our audience located in the Pacific Northwest. Without further ado, I'm going to jump into our set of questions that we ask our API partners, and I'm super excited to do so. So Dan, we'll start with a slow pitch right down the middle. Why does ValChoice exist? Put another way, what is the reason for participating in the independent agency channel?
It was an accident, to be completely honest. I came out of the great University of Linfield as a technical guy and moved to California, became an engineer, did a variety of things in the tech world, including moving up through all the way to CEO. But I was an avid bicyclist too. And one day I was commuting to work on my bicycle, and a car decided they could turn left in front of me before I made it to the intersection, and neither of us made it to the other side. Wow. That by itself did not motivate me to move into insurance. That motivated me to be loaded into the back of an ambulance and taken to Stanford University Hospital intensive care unit. But what I learned over the coming months was that while I had a long physical recovery, I was going to have a longer financial recovery. And the reason was there were no insurance companies that were willing to pay my medical bills. So that included my health insurance that said this was a car accident, which is unusual, but it happened to me. That included the auto insurance that the driver hit me who was 100% at fault, and they waited until just before the 2-year statute of limitations expired to pay out a $50,000 policy. And then my own underinsured motorist coverage, which included being on a bicycle, fought me vigorously for a very long time. When that was all done, I thought, man, how could I have avoided this situation? That is, the song, if it weren't for bad luck, I'd have no luck at all, felt like it applied. But that just seemed like the odds were too far against that for it to really happen. So I'd ask people in the industry and say, how would you have avoided this? And everybody gave me the same answer. The answer was you needed to check financial strength or financial stability ratings. But I did, and it told me nothing. It gave no indication of a problem like this at all. It was completely the wrong advice. So I thought, this is a problem that needs to be solved. This is something that people need to know. I set out to find a way to collect the data, reliable data, high quality data, that would let people know the difference between ability to pay a claim, which is a financial stability rating, and willingness to pay a claim, which is what we do. So we rate we rate carriers' willingness and also their service level when it comes to interacting with policyholders and prospects. So it's a completely new way of doing things. It's done on a fuel gauge style image where the needle pointing straight up and down is the midpoint of the industry. So it's very easy to tell how good your insurance is. If that needle's to the left of the center, it's not too good. If it's to the right of center, it's good. So that's That's what we do. That's why we do it. It's completely taken over my life.
Mm,
This is basically a mission oriented business for me. I really believe in it. I really believe consumers need it. I did it.
hmm.
I did it for consumers. I didn't want anybody to go through what I went through, but the
Absolutely.
benefit accrues mostly to carriers and agencies.
Mm,
That's really where the significant benefit lies.
wow. Um, I live in a very bike friendly city, and still it's something that whenever I'm driving, I am always terrified of the consequences of my decisions as a motorist. Um, I'm definitely happy that you came out on the other side of it, and I think that we're all benefiting from the hardship that you went through there, um, with ValChoice being in the market. My next question is, if you had to pick one aspect of ValChoice that draws in and keeps agencies working with you, what would that be, and why?
There's really two primary use cases that draw people to us. So I'm going to give you two instead of one.
Please.
One is increased profitability. One is agencies that are looking for a way to run their business more effectively. But the other is, which is really becoming an issue right now, is reducing the anxiety in the office over all these remarketing requests that are
Mm,
coming in. It's a very stressful time in this industry that's hard on people and it's burning people out. And so being able to bring that down is helpful. Both of those bring customers in and both of those work to keep customers. But there's another thing that has the effect of keeping customers as well, and that is ease of use.
hmm.
One of the things we do is it's kind of shockingly easy to use. Your why is a little bit longer answer than just those things. The why, I'm going to start with um, increased profitability.
Hmm.
There's an agency that's a HawkSoft user that I first spoke with about a year ago, and this agency owner had a very direct question: how are we going to benefit from working with you? And we were new to having automations at that time. So we didn't have all the data we have now about how well it works. And we hadn't really been effective at collecting data from manual use. So I thought back all the way to when we did focus group testing. And focus group testing showed us that people would use our data to make decisions based on our data, but mostly when they heard that backstory I just told you. When they heard that
Mm,
backstory, it was 10 times as effective. Huge difference. But that was enough data from the focus group to calculate how is this going to impact the actual decision making in the process. And I told him, we're going to reduce your remarketing by 75%.
wow.
And I think his first thought was that I was completely crazy. And then he said, well, I'd actually be happy if you reduced it by 10%.
Mm,
So I thought, okay, well, that's a pretty low bar. That's going to be an easy one to jump over. We've been working together with that agency. They've joined the A/B testing pilot that we have going. We've been working with them for 6 months. We have a couple thousand of policyholders through the process, and we're delivering 75% reduction in
wow.
remarketing. So we're the math beforehand actually worked. Now that answers the question about how effective is this for reducing the anxiety level for
Hmm.
people in the office, but it doesn't answer what does this do for my business financially. And so to answer that, what we do is an ROI analysis and turn that into the cost of remarketing, cost of the agency, both in terms of labor as well as in terms of lost commission. And we have a calculator on a website. I think you'll post the link to that.
Yeah.
The website is agent.valchoice.com. Somebody can go there, look under calculators, and look for agency profitability calculator, I think it's called, and just enter the numbers for your agency. But if we take a relatively small agency, say 3,500 policyholders, say 30% are wanting to be remarketed, you put in how much time you think it takes to remarket them. We put in 2.5 hours for our assumption. That agency is losing over $90,000 a year just in labor costs, and almost $60,000 a year in lost commission, assuming no change in commission rate. Sometimes commission
Hmm.
rates going down in order to remarket. That, when you look at our costs, that's over a 3,000% return on investment in a year. And that's only using our tools for stopping remarketing. We also have new business features. We also have all kinds of other capabilities. And that's also not assuming that there's a carrier co-op program involved,
Yeah.
that there's carrier volume discounts involved. We see common cases in agency and brokerage world where the actual return on investment of using our tools is more than 10,000%. It's like astonishingly effective. It literally can pay off in days, and it can be set up in minutes. So the keeping them is pretty good, pretty compelling value proposition for the
Hmm.
agency, both in terms of that anxiety level as well as profitability. But people ask me, come on, Dan, how can this really work? This is a price driven industry. I've been told so many times this will never work. This is a price driven industry. And it is a price driven industry. And the reason it's a price driven industry is because there's no quality metric. If you don't give consumers a quality metric, they have no way to make a decision except for price. And so I compare this to wine. I love the wine analogy because they're actually so similar. Sometimes wine and insurance doesn't seem that similar, but they really are. They're both very complicated, and you have a hard time telling what the difference might be by looking at them. When I go to the store to buy wine, I go and I'm looking, okay, I want a bottle in the $12 to $19 range, and I'm looking in that kind of price range. And I have no idea what I'm looking at. It's like, okay, which one of these are good. But now they have these little labels there that says this one scores a 92 by Wine Spectator, by Parker, or whoever it is, but that one's 25. And I said, no problem. I'll pay 25 because I want to have something good. I don't want to waste my money. And that's what we're seeing happen with consumers of insurance. The same dynamic is absolutely true. And we've created that rating system so somebody can actually use it.
Mm.
And so that's why this works. And we'll get into the economics of it a little bit more as we go on, but it's powerful. It's
Yeah.
really going to change the way the industry works. And the ease of use is such an important thing. Set it up in minutes. Nobody has to learn a new interface. They just keep doing things the way they've always done things and the same tools that they've always used. We One more story here, and then that'll be the
Absolutely.
end of this question. You're probably wondering if you're going to get to ask any more questions.
Oh, you're good.
When when I was a VP of sales in the tech industry, I had the bright idea of implementing a CRM system. And this isn't designed to bash CRM systems, but it is a little bit unintentionally. For love nor money, I couldn't get my team to use that system. It was a new way of doing things, and they were not willing to do things in a new way. Um, I look at this industry and think, man, it's even a bigger problem here because in a lot of times you have people working in an AMS, and now you're thinking about introducing a CRM. So you have one set of data, two places to go to work with it, and nobody wants another place to go to in order to complicate their life and what they do on a daily basis. We're totally different. We run in the background. We're an add-on. We
Hmm.
turn that AMS into a CRM. And some people are probably thinking, but I already bought a CRM. That's okay. We can work with that too. So we're working 10 times as effectively of just having our information or information like ours, but we're
Hmm.
doing it in a way that it runs in the background. These automations are taking place, and when somebody gets an action item, something they have to do, we post it to them. Here it is. This is what you need to do next in this opportunity. So it's really, really simple.
Excellent. And we'll definitely dive into how ValChoice and HawkSoft work together in a moment. I noticed during your explanation, you touched on the anxiety agents are facing right now, and Kelly, your face definitely indicated that it's a little rough right now to be an agent. And so I could definitely see why being able to differentiate yourself in a harder market helps you stand out.
It is a harder market, and it's challenging, and you're having the same conversations, difficult conversations every day. I would encourage any agency owner, even a salesperson, to go out there and check out that calculator, because I think you have numbers in your head, and I think you've seen calculators before, but to actually interact with this calculator and put your own figures in there, it's extremely powerful and a little bit gut wrenching simultaneously, but it kind of it helps you lean into the value of retention within the incumbent carrier for sure.
Excellent.
I
Um,
should mention that Kelly
Please.
was a collaborator in this calculator, so it wasn't just me making up numbers about how the industry works.
Well, and that's one of the things we appreciate about Dan is that he is open to listening. Some if you're not in the industry, you have a concept of what a remarket or a reshop costs or what the labor hours. Dan was very open to, how does this work? Is this accurate? And that's why I think it's such a powerful tool right now.
Excellent. One, fans of HawkSoft will know that one of the areas that we have a particular interest and advocacy in is the concept of data ownership, and doing our best to advocate for the agency's ownership of the data that they produce. So we ask all of our partners this question: how does ValChoice approach data ownership with regards to your customers?
Agency data is agency data and nobody else's. We only use that data to benefit that agency. So however we can mine that data and uh, deduce things from that and take action item, we'll do that to the best of our ability, but we won't ever do anything to market or use that data in some other way that's not a benefit to that agency.
Awesome. I love when it's that straightforward. And I appreciate it's every partner we kind of put we take into the dark room and the single spotlight, and we're just like, give us the answer here. And so I really appreciate that the directness in your response. Okay, so we have two more fun questions to dive into. The first one being, what is the hardest part of working with insurance agencies, Dan?
This is an
Keep in mind
interesting
you have
question.
one on the call with you, so
I actually don't think anybody's ever asked me this question before. And as I think about it, I'm going to start the answer to this question a little bit differently. I'm going to start the insurance industry, and then I'm going to drill down to the agency. The reason for that is I think a lot of what affects the agencies is actually driven by carriers. And so I think there are things happening there that could make it easier to work with everybody. The first thing, it's more than one thing. The first thing is something none of us can do anything about. A lot of insurtechs came into the industry. They overcommitted, didn't deliver, and now as a group, it's hard to trust an insurtech. That's just reality that we all have to deal with. The second thing we can try and deal with a little bit is just being new and different. The industry doesn't really like things that are new and different. But the third thing starts to get the heart of it a little bit more, and it's contentment, or what I refer to as inertia. And it's not those things; those are kind of two words describing the same thing in a way. But the what gets interesting is why. Why is the industry content? And this is going to surprise people. I'm going to take the position that the industry is content to a large degree because of low quality data analysis. And I think that's going to surprise people because you'd say, how can an industry that runs on data have low quality data analysis? So I'm going to give an example of this. As ValChoice is figuring out how to go to market, one of the things we did is we did a lot of different types of analysis to understand where the pain points in the industry might be, including channel analysis. So how's business migrating within the channel, which companies are succeeding and not succeeding, and looking at every single company, not just a big few. And what we found is a chart that I wish I could show, but it shows that if you take the IA channel, this is the most interesting piece, if you take the IA channel and you filter those companies by how well they perform for consumers and take only the companies that perform best for consumers, 80% of them are losing market share every single year. 20% are gaining market share, but that 20% is rotating. It's not the same 20% every year. It's based on when they get their rates low enough or aggressive enough that they start to gain market share, and then they have to recover from that, and they lose again. And as I talked to agents and carriers about this, people had a variety of reasons. The most common response was, that can't be right, because I just got an email from that carrier talking about how great last year was and how much they grew and all these things. And I'd go see C-level execs of carriers, and they'd say, no, that's not right. We're growing. We're knocking the cover off the ball. And I realized they're looking at the data some other way. How are they looking at the data? So there's really only three ways you can measure it. You can measure market share, you can measure policy count, or you can measure premium. And nobody effectively, I think nobody's measuring market share, which is the only true measure of telling you how you're doing relative to competition. Quite a few are measuring policy count, which is only showing relative to the number. The base number is changing, right? The market's growing, so it's not the same number of policies every year. So that's a little bit meaningless too. And premium is a completely meaningless way of measuring it. And And so there's a disconnect there. And this disconnect really got driven home to me in talking with a large, successful IA channel carrier that I've been talking with for a while. And the obvious way to use ValChoice is retention. It's just such a home run. It's an immediate profitability increase. There's everything is good about that. So I'm telling them, here's how we could get a retention program going. They stopped me and said, Dan, we don't want to hear about retention. We don't have a retention problem.
Mm.
And I'm thinking, holy smokes, what have they been smoking? I have all the data here. I can see what's happening. They have a retention problem.
Mm-hmm.
And in having more conversations over time, it finally came out they're measuring retention by premium dollars. So I'd say they're probably high 80s in policy count retention, and nearing 100% in premium dollars. But the profit difference, and we have another calculator on that same website that's called the carrier retention calculator, I think it's called. It's in the same menu that lets carriers calculate how much they can increase profitability by solving their retention problem. And that particular carrier, hang on to your chair, our estimate and all the assumptions are right there for how we calculate it, so people can figure out, can judge if we're doing it right or not. Our estimate is that we could increase their profit per year by about $70 million. It's a stunning number.
Yeah.
It's an absolutely stunning number. And this is, so to say we don't have a retention problem is almost shareholder malpractice, right? It's just looking at things the wrong way. So when you're looking at things the wrong way, you can't make good strategic decisions about what we need to do next. Mm-hmm. And that's where this kind of falls over into the agency and broker channel. Your guidance is coming through from people that are looking at the data the wrong way and saying, this is what we need to do next year. But there's probably low-hanging fruit that's there that's much more productive, much easier to deliver on, that isn't even being considered. And I think that's part of what makes it hard to work with this industry, because things are done in the way that they've always been done, instead of maybe looking at some new ways where things could be done much more effectively. And so I want to turn this into an analogy and compare it to another industry. But first, I'm going to tell a story. I've spoken at some agent conferences, and at these agent conferences, I'm not a great speaker, so I'm always in fear of people falling asleep while I'm speaking. And so I try and get people to stand up in the middle somehow, just to make sure they're awake. So about halfway through, I said, okay, this was all agents, 100% agents. I said, anybody who's ever had a complaint from a client that was a legitimate complaint about how a carrier was handling a claim, they were upset because something the carrier did that they shouldn't have, please stand up. And good news, everybody stood up. So nobody was asleep, but it's a big problem. It's an issue. And then the next question was, or the next action was, now if that problem was caused by the financial stability or financial strength of that carrier, remain standing. If that wasn't the cause, go ahead and sit down. Everybody except one person sat down. So one person was still standing. So effectively, based on the size of the group, this is a 1% problem. And this is the metric that we're giving to consumers to make decisions about how they buy insurance. But there's a backup plan for this metric too. The regulators are doing a phenomenal job of keeping financial insolvency from affecting consumers, right? I mean, they're doing a great job of that. So even when there is a financial insolvency problem, it's rarely really impacting somebody. So now we take this 1% problem and we give that as a metric for how people can make decisions about insurance. And I'm not demeaning in any way financial stability ratings. I think they're very important and tremendous guidance for regulators as they watch things, keep an eye on things, and make sure things are going right. But it's not the decision for how you sell insurance based on value. That's not the criteria. So to the analogy, let's say we're in the car manufacturing business. We've been doing things the same way for a long time. And what we decided when we first started building cars was that we were going to offer one gauge on the dashboard. And that one gauge was going to be oil level. And it works. Nobody's running out of oil. Everybody has plenty of oil, but people are running out of gas all over the place, right? And they're getting angry about running out of gas. And you think about, how does that affect the market? Well, the first car manufacturer that comes out with a fuel gauge in there instead of just an oil gauge, people are lined up coming in the door to buy that product because they've created a disruptive innovation. And that disruptive innovation is a very important concept. People use the term disruption, but they use it too broadly. It's often used just to mean change. Disruptive innovation, as defined by Clayton Christensen of Harvard and what he innovated, was you create a new market segment that there's a blockade around. It's your market segment. You're in that market segment by yourself. And until the other car manufacturers can come out with a fuel gauge too, that dealership owns his market. It's all his, because that's what people want. And that's what we've done. We've provided that type of information for consumers and for agencies and for carriers to differentiate on, create that disruptive innovation where they can immediately benefit from the retention and the renewal process. And over time, as this becomes more broadly understood, it's a new business tool as well. It's already a new business tool, but it's not as obvious immediately. It takes longer to collect that data. So this is a whole new way of thinking about things that is really to the benefit of the industry and to the constituency I really set out to make sure is served well, the consumer. So everybody benefits from that.
Fantastic. I often, people poke fun of me internally in HawkSoft because of my reliance on metaphor and illusion and allegory. I think it might be a product of our liberal arts education, Dan. I think we might have to reel that back. But I think that's a great explanation. And it really is. I think that you touched on a lot earlier, there's a lack of trust in InsurTech just because of the rapid pace and the kind of explosion of different quote unquote new opportunities in InsurTech that maybe haven't always panned out. I'm on the record as not being a fan of the Facebook motto of move fast and break things. And I think that's what a lot of people hear when they hear disruption is, oh, they're going to break the system so they can rebuild it. And it's like, well, I think as you clearly pointed out, no, we don't need to break it. We just need to identify where it's underserved or identify where maybe the thinking isn't what it could be. And we can address that in a different way, which it sounds like ValChoice is absolutely doing. Last question to win back our independent agency audience. What is the best part of working with insurance agencies?
Multiple answers. Again, I've met a lot of great people in this industry. I feel it's personally fulfilling because I feel like I'm on a mission that's benefiting agencies, carriers, consumers. I feel like I'm delivering something positive to society. Maybe not everybody sees it that way, but that's how I like to view it, and that's fun. And by the way, I'm kind of a numbers geek. I actually love being surrounded by numbers, so this is a good place for me to spend time.
Fantastic. This has been an extremely good and meaty conversation about ValChoice, and we're gonna tease the audience so you come back for part 2, our in-depth interview with Kelly Endicott about her experience using ValChoice at K&M Insurance Agency. As HawkSoft's Director of Partner Integrations, I can confirm and celebrate the fact that ValChoice is an API partner with HawkSoft. They utilize two-way API integration with us. And tune in to next week's episode where we dive into exactly how that works and what functionality you would have using ValChoice with HawkSoft and our exploration of the questions for our mutual agency customer, Kelly Endicott. So we'll see you next week. Thank you for watching today's episode. Click the video's description below to learn more about our guests and to view the latest podcast episode as well as other content from HawkSoft. We appreciate you watching and hope you join us next time on the Insurance Perspectives Podcast.